Alright, welcome back to MMG. So, today's video, this is important. There's some new developments going on here, and I think it's very important. First of all, I will cover that. I will cover the news, and then you guys could go into then I'm going to cover TA. First of all, not financial advice. Consult your financial advisor before doing anything. Stocks, equities, all extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. It's more about learning how to trade and me just covering macroeconomic developments. So, someone posted this article in one of the free chat groups. You guys could, links are below this video. This is from Half Dollar. So I went and I looked at the news, and you cannot find anything on this except this article. And I looked around, and the search results come up like, you probably have to go down to like the 5th or 10th page on any search result with any search engine, which makes me suspect. So what's going on? Let me read this real quick. So the CME Group to launch new Shanghai gold futures contracts on October the 14th, connecting global market participants to the Chinese physical gold market. So right there, right off the title, that's weird. So historically, whenever a new empire emerges, they control the metals. For example, so London used to be, or England, not London, England used to be the world superpower. They controlled all the metals. Their currency was backed by it and all that. It's called the sterling, right, and the pound. And then the U.S. after World War II became the superpower, and we had all the metals. Because after World War II, all of the European countries, they gave us all their metals, and in return, we helped them with, winning the war. And now, it looks like China has the most physical surplus or supply. I wouldn't say supply, but they have the biggest hoard of metals. Well, they have the largest physically backed derivatives exchange. And now they're going to work with the CME, and they're going to become one. Like, they're going to become the world metals derivatives exchange, the international one. So I think this is actually more important than the trade talks. And ironically, it just seems like the trade deals, they're not really working out. But in the background, in the meantime, for some reason the US is just okay with China running the futures market for precious metals. So that doesn't make sense, right? How are we in an active trade war trying to, save the U.S. trade deficit? Well, stop it at least. Meanwhile, the most important thing, which is the backing of dollars, is at stake here because China now is going to have some control over this. Because technically they do have the largest physical market. Now, you could look at it from another perspective, right? The U.S. might want to, because they have all the physical there in China, maybe through the futures market, we could start pulling all the physical back from the east back to the west. But then why would China go along with this? I don't really know. I mean, I'm not sure how to look at this. But let me read some of this. Designed to connect global market participants to Chinese physical gold markets, these two new financially settled contracts will be denominated in US dollars and renminbi. So, I mean, this is literally like the US dollar competing with the renminbi, and whoever's going to have the most gold in the end is essentially going to be the remaining power, right? Or superpower. Or, I mean, whoever has more gold in the end is going to have all the cards. We'll have the trump card. All right. Additionally, the SGE, the Shanghai Gold Exchange, that's the SGE, the world's largest physical gold exchange, will launch new contracts on October the 14th. That's tomorrow. So, tomorrow, I have a feeling metals are going to be volatile. We'll either get a huge dump, maybe a huge pump. I don't know. I really don't. But this is very interesting. So let me read this. As one of the world's leading gold refiners and approved brand for the Shanghai Gold Exchange at COMEX, this is an exciting opportunity for Metalor, said Nicholas Carrera, global treasurer of the Metalor Technologies SA. This solution provides a unique hedging tool for China gold exposure. A hedging tool. We are extremely pleased to collaborate with the Shanghai Gold Exchange on these contracts that will bring market participants worldwide increased access to Chinese gold markets, said Derek Semin, Senior Managing Director of Global Head of Commodity and Options Products, CME Group. The Shanghai Gold benchmark is widely regarded as the renminbi-denominated gold benchmark, and the launch of these new gold contracts, combined with our ability to offer USD and Chinese contracts utilizing benchmark, will create new opportunities for clients who want to access China's physical gold prices alongside our liquid COMEX gold futures options. It's like almost like they said they want access to the physical futures. The COMEX does, because COMEX doesn't really have any physical. That's kind of what I just read there, right? So, like I said, I don't know why, in the midst of a trade war, why China would agree to this. I just don't understand. The launch of these two new Shanghai Gold futures contracts by the CME Group marks a significant step in the internationalization of the Shanghai Gold benchmark. At the same time, our adoption of the CME Group's COMEX Gold Futures Asia reference prices for the settlement of the Shanghai Gold Exchange contracts will provide a domestic market participants with the benefit of the world's most recognized gold futures price as they manage their exposure to the physical gold market. So it's a win-win cooperation between the Shanghai and the CME Group. I don't know how it is. I will elaborate what might be happening here. Let me finish reading this. This is the last part. As the world's largest exchange-traded physically gold platform, Shanghai Gold Exchange is a national-level financial market specialized in precious metals trading, including gold, silver, and platinum. It has 269 members, 12,272 institutional customers, and 9.93 million individual customers. Among them, 79 are international members and 81 are international customers. Its domestic members represent 90% of China's gold production, output, and consumption volume, as well as 95% of the country's refining capacity. While its international members are all major international banks, gold industry multinationals, and investment institutions with a decade's efforts, Shanghai Gold Exchange has built a multi-layer market system comprising price matching, price asking, benchmark price, and gold leasing in terms of trading modes, featuring integration of main board and international board. China Gold Exchange applies to the settlement principle as centralization, netting, and multi-tiered. Currently, there are 18 margin custodian banks. These are all the major banks in the world, all right, for main board, and 9 margin custodian banks for international board, with 66 certified vaults deployed across 36 cities in China. Physical delivery through Shanghai Gold Exchange is rather convenient, as allocation and distribution of gold ingots and gold bars are centrally arranged by the Shanghai Gold Exchange. In April 19, 2016, Shanghai Gold Exchange launched the Shanghai Gold, the world's first RMB-denominated benchmark price. The Shanghai Gold trading mechanism is an important attempt of China's financial market in innovation and opening up and global integration. It also provided a well-functioning tool for risk management and innovation for gold market participants, while accelerating the process of internationalization of China's gold market. With 16 years development, Shanghai Gold Exchange has gradually become the core and hub of China's gold market, as well as the important global trading market for precious metals in terms of gold, silver, platinum since 2007. The Shanghai Gold Exchange has been the world's largest exchange traded physical gold platform for 12 consecutive years now. So it's the largest exchange physically. Well, in a nutshell, I mean, like I said, historically, the empire that has all the metals and has the largest exchange and has control over it is the new superpower, and looks like China's it. And so what am I speculating? I'm thinking these internationals, right? These banks. I mean, like I said, I don't think they care about the U.S. And we're going to find out if China is going to want the price of metals to go up. Because if the price of metals go up, I mean, it's not good for the U.S. if they don't have the amount of metals they claim to have. Another thing could be, maybe the U.S. could use this to pull back all the metals while the dollar still has value from China, from east to west, like bring it back. But I don't know why China would go along with that. I kind of view this as it's just a club. It's just a global club that they don't care about any nation. They just go to the next farm that's up and coming, and that's China. Economic farm, right? And they're gonna go and graze and fatten the pigs and sheep over there, and they've already pillaged the West, so that's the new farm. And I don't know if Trump knows about this. Who knows, right? So I guess the only thing right now to speculate on, what are they gonna do? Are they gonna manipulate prices lower for longer so they could accumulate more, or are they just gonna let the prices loose? And then Western institutions could buy these contracts and take these banks and institutions, they're gonna make money on the upside with some precious metals. They've already positioned themselves. So I don't know. I really don't know. But this is very interesting. This is way more important than anything else going on, to be honest. Of course, that's why no one's talking about it. And that article that half dollar guy made, I mean, he's right to the point where why isn't anyone talking about this? Probably because nobody knows yet, but, guess I'll talk about it. All right, let's take a look at some TA. So on the daily, the S&P's on a 9 count, so is the Dow. The dollar took a nice hit. It dumped Friday and Thursday. It's down at the 98.2 handle. So I don't know if this is the full extent of the dollar rally. I think it all depends on QE and what interest rates are going to do on the 30 and the 10-year. If the interest rate keeps falling, the dollar might just start falling now. Either way, it's on support. 98 handles major support. If that breaks, then I think the trend might change for the dollar. If it bounces back up and it could, get back above 99, then it might try to break above 100 handle on the dollar. So let's take a look at the S&P, then we'll look at the Russell, and then Nasdaq and all that. So here's the weekly on the S&P. I still kind of consider this neutral on the weekly, but it looks somewhat bullish. Oscillators are very neutral. So let's take a look at the daily, see what that tells us. So the daily's on a 9 sell. This is this recent candle from Friday is actually an inverse hammer, which is negative, but the MACD is having a crossover to the upside here, which could launch the price higher Monday, tomorrow, and Tuesday. So let's take a look at the 4-hourly, see what that's telling us on the S&P. I would say the 4-hourly is actually bullish because we have a 3 count to the upside. The 4 and the 5 count, so next 2 days, Monday and Tuesday, might trade sideways and then higher possibly. Let's take a look at the Russell. 2,000 smaller companies to mid-sized companies in the U.S. It's a good way to gauge the domestic market and economy. It did spike Friday with everything else. They hyped up the trade talks like I said they would. Yeah. No surprise there. It did break above the 23.6 fib retracement. So they'll probably push it higher. I mean, it's probably going to go back up. And then as the Fed talks, the repos, they're already capital injections into the overnight lending markets and the banks. So I'm guessing they're definitely going to do a rate cut already priced in by the interest rate futures market, and everyone's expecting a 25 basis point rate cut. So they're probably going to do that. So the market's probably going to go higher. If they do a 50 basis point, then it's going to go even higher. Then we could actually make new all-time highs. But the Russell, I mean, it's the weakest, and it's a barometer of the domestic market. The S&P 500 and Nasdaq and all of them, they're more international companies. So let's take a look at the Fangs. Very international at this point. If the Fangs could break above, the Fang Index here could break above 2,660, I think everything's going to start making new all-time highs, and we're going to get our melt up that I've been talking about for months, all year, right? If it breaks below 2,500, then I don't know. Then the market's in trouble. Well, let me finish the Nasdaq and transports. Nasdaq, I mean, there's a bullish pennant here. Ascending triangle, right? I expect it to break higher. This is a daily chart of the Nasdaq. So again, it's probably going to look like a melt up going into the fourth quarter of 2019 now. This is the transports. Transports has a bull flag, so that I guess that could break out to the upside as well. Although transports is really fundamentally driven. We'll see, right? But there's a bull flag on transports. Alright, here's what's important. So, if the 10-year interest rate keeps rising, equities will tank because of that. Because if the interest rate on these bonds go up any higher, because it hit 1.75, and I told you guys, once it hits 1.6, metals are going to pull back some more, and it did that literally Friday and the end of trading hours on Thursday. But they can't let that happen. They just can't let it happen. So I think they're gonna somehow get the interest rate down this coming week. They're going to have to. And if they do that, metals are correlated oppositely to the interest rate. So there's a divergence. So technically gold should go back up if they could get the 10-year back down, especially below 1.6. And they have to, because if it goes any higher, I mean, the stock market, it's not going to make new all-time highs or any of that. So they're going to have to somehow, they'll go into the open market, they'll do something. And then precious metals should go higher. Although now we have this new development with the Shanghai, right? So it's getting tricky. Here's crude and oil, E-mini light crude futures. It hit support on 54. I have a feeling oil's going to go back up for winter. It's not going to drop. It's going to go up in dollars. This is in dollars term. Alright, let's just look at gold now for TA-wise. The weekly's on a 5 count. Technically 6, 7, 8, 9. Possibly 4 more weeks of downside or sideways trading. But if we go to the daily, this is what I'm more interested in. For, a swing trade to the upside possibly. And then I expect a major correction. I don't think the prices will get above 1680 if we do break back up to the upside. So the daily looks very neutral. If we get a smash tomorrow or Tuesday, I don't know how low they'll smash it. There's a ton of support at 1,413 all the way up to 1440. So it's sort of a make it or break it for gold. Daily looks neutral for the oscillators. Doesn't look good. Let's take a look at the 12-hourly. 12-hourly looks positive because we're going to come up on a... I wouldn't say positive. It looks... Some buyers did come in Friday. It held up with all that good news and blah, blah, blah. And right now it's sitting at 1493. So if the price could just get back above 1500, then there's still a good chance of this bull flag playing out and gold goes higher and starts running towards 1600. It's just very tricky right now, especially with that Shanghai news. Of course they would do this. I mean, it's never easy. So it's really sitting at support here. We do have moving averages that are going to cross to the downside tomorrow on the 4-hourly time frame. If the price could rally into it and at least back up to 1520 tomorrow, then there's a chance of precious metal prices going higher for like a few more weeks. But if it can't, right, and the stock market keeps going higher and gold just sells off tomorrow, Tuesday, or this week coming up, then I would I'm definitely not going to hold long with my metals ETFs. I'm going to take profits. They're still at a profit. And then I'm going to play the inverse play. I'm going to short it. Well, not short. I'll just buy inverse ETFs to the longs, which is you're betting on an inverse ETF, meaning it's the opposite of going long. You make money as the price falls, right? It's only for experienced traders. And that's how I hedge against my long-term positions that are, in mining stocks for the long term. I hedge with inverse ETFs. And I also will make a profit. So that's how I look at it, guys, for tomorrow and Tuesday and the rest of this week. It's a make or break it. Will they smash it? I don't know. I'm 50-50 at this point. I'm very 50-50. So that's how it looks like for now. Let's take a look at silver real quick. I mean, silver is going to follow gold, guys. I don't know why he's like, why don't you look at silver? I'm like, because I look at gold. Silver on the 4-hourly looks bullish. So if silver takes off, I guess that would drag gold higher. Sometimes that's how this works out, especially because of the ratio. The ratio is so out of balance. The silver to gold ratio, it's still up around 80. It should be around, I don't know, at least 30. So as the ratio needs to come closer, right? Silver needs to go down to 30, so 30 ounces per 1 ounce of gold. The price of silver would actually go up in value, which would also help gold go up higher as well. It's oversold for silver right now, so that's good news for the price. And it's also sitting on a 100-day. No, that's the 12-hourly. The 12-hourly doesn't look too great. What does the daily look like? The daily looks, I mean, it's oversold. And it's also sitting on the, I mean, it bounced off the 50% retracement. We do have a red Ishimoku cloud coming up, which is not good on the daily. So be prepared for them to smash it. Unless China wants it to go higher. And I don't know what they want. The weekly, the MACD looks like it's going to have a divergence to the downside on silver. So silver might get smashed back down. So I wouldn't be surprised if it did revisit the 61.8 fib retracement, which would take it back down to 16.8. So it's either we get the big correction. I mean, we already had a decent sized correction, but we either get a continuation of this will be the big correction, or you know, the Shanghai exchange comes online tomorrow and China's like, screw you, US. We're going to pump the price of metals, and that's going to cause trouble for the stock market, the US stock market, and Trump. And then I mean, that's kind of like an act of, you know, I don't want to say the word, but you know, it's financial, it's economic. It's economic warfare. It is. Yeah. So my thoughts and opinions, I could be completely wrong about everything. Do your own research, consult your financial advisor, smash some likes, leave anything in the comment section. Please share my videos, it's the only way my channel grows. Check out the links below my video. Check out my website, 10% off. I don't know if it's still on. But if they do smash, I don't care. That's great for me. It's more it's cheaper prices to accumulate for the largest wealth transfer ever. Alright guys, until next time.